Okay, today is Friday, February 13th. The market's closed and the S&P was flat for the day and it is down 1.4% for the week. This morning, we had the CPI inflation report, Consumer Price Index inflation report. That came in year over year at 2.4%. Just a reminder, you take the high prices that we have been paying since last January, and on top of that, you add an additional 2.4%. So just wanted to point that out that that is in addition to the high prices we already pay. So for the past month, there's been a lot of volatility. As you know, we've been talking about it. The average S&P move has been less than 0.5%, but the average stock move has been over 10% more. So there's a huge divergence there between the index and the individual stocks, rather, up here. And that's at a 98% disconnect to its historic average. So massive volatility underneath the surface that you might not see if you just look at that headline number. So for the past month, the best sector of the 11 different stock sectors has been energy, up 16.5% as well. Dividend stocks and staples are outperforming too. Energy, dividend stocks, staples, historically safety trades when there's some worry in the market. I've got a long-term holding in AT&T. I always like to look at that because in times of uncertainty and worry, definitely the market comes running back and buys AT&T. That's up 23% in the last month, if you can believe that, that boring old telecom company. So let's talk about price action. A little bit of a concern because large tech, so Google, Amazon, Microsoft, has been selling off on the worry about all the money that they're spending on artificial intelligence. But the semiconductors have not been rising. Those are the beneficiaries. That's a proxy for where that money's going. They have not been rising as much as those big guys have been falling. So there's definitely, in my mind, a disconnect there between that worry and not the reward on the other end of it. So that's something I'm keeping an eye on as well. That AI worry is also happening around the world. The MSCI All World Index is up 9% for the year and versus the S&P 500, which is flat. So the All World Index is up 9%, S&P is flat. The money is leaving US markets and it's entering the international markets. And also 90% of foreign central banks are easing their monetary policy. And so that incentivizes investment, it incentivizes buying of foreign stocks. And so it raises, it boosts those, supports those foreign stock markets as well, which have been outperforming. In addition to this, and I don't want to sound too negative, but the weakening US dollar can exaggerate this because let's say that you invest in a European stock and you buy the stock when the euro, €1 of currency equals $1.10 of US dollar. And later on you sell that stock as the dollar's been falling, you sell that stock when the euro is now equal to $1.20 when the US dollar has been falling. You make an extra 10% on your investment. So let's say that all world index, you got a 9% return on that. You get an extra 10% for an overall 19% return purely based on the currency itself, which was more than half of that 19% move. So just want to point out how the currency can really be such a significant factor as well. And the opposite is true. When the US dollar is falling, those foreign currencies, those foreign investors are less incentivized to invest because they need to make up for that return because the dollar is falling when they convert their foreign currency to buy into the US market. So it works on the other end as well to disincentivize the foreign investors. So let's talk about earnings and fundamentals, and just about done with today's show. But I just want to touch on some things that there's a lot of chop going on in the market. We've talked about it since October. Really, the market has been flat, has not done much of anything. It's been bumping its head against a very, narrow range. And there's been a lot of rotation between the different sectors trying to find new leadership, but overall it's really again just been testing that, trying to make a breakout, but it hasn't been happening. And after a certain amount of attempts, it historically will fail and come back down. And so I'm watching that. So let's talk about earnings and fundamentals. For example, staples. The staples, we've talked about toothpaste and things that you always need that everyone, you have to buy. The milk and the toilet paper and all of that. The staples for the year as a sector are up 15%. But that isn't from their earnings. That the earnings are very steady and they don't fluctuate. The stocks, the staple stocks are up 15% because people are buying them. So that is a multiple expansion. The multiple, and this gets a little bit geeky, so stick with me, but the price to earnings multiple, the PE multiple, the price has been going up because people are buying the stocks purely, but the earnings are constant. So the denominator hasn't changed. So what was a price to earnings ratio of maybe 8 for a staple stock is now 12, simply because those stocks are being bought, but the earnings haven't changed. And that to me indicates a market that's searching for something to happen. But again, it's not based on earnings. And the whole point of me saying this is I always like to go back to the fundamentals of a company, what it does, and the earnings that it generates, because over time, that is what wins out. And so the the three measurements for a stock that I consider most important, okay? And this is it, this is the takeaway. The profit margin of the company, the earnings that they generate, and at the end of the day, the cash flow. So profit margin, earnings, and cash flow. Those are the three most important in my mind. And I just want to leave you with that. So look for those quality companies, because at a time like this, I feel like there's a lot of searching going on in the market, and we'll see where it all goes. I'm always rooting for everything to do well, but we've got a failing, underpinning of those huge big tech names and the questions in the AI trade. And so that foundation is really being questioned. And in the meantime, the market is rotating into different sectors like staples and energy, and looking for something to maybe trying to force the hand and trying to get something going and motivated to occur. So I'm keeping an eye on that. I hope that all makes sense. And the last thing I want to say is that Monday, the stock market is closed because we are commemorating George Washington's birthday. And that being said, remember the three things that I like to think about the most when it comes to our money, your money, and mine. Number one, protect it. Number two, preserve it. And number three, then you can make it. Okay? I hope everyone has a great weekend. I'm looking forward to it, and we'll see what next week brings starting on Tuesday. Take care.